If you're discussing market efficiency and you're trying to decide whether an active investment approach makes sense for you, there's 3 questions that you need to ask yourself. First, how efficient are markets? Second, do you have the tools and the capabilities to capitalize? And third, is it worth the cost? Now, these are questions that as an advisor or planner, you should be asking yourself, but also if you're a DIY investor, these questions are for you. So first, how efficient are markets? A great example is people will often say, well, US large caps are pretty efficient, so it doesn't really make sense to focus on an active strategy there. Okay, cool. That means you're really only looking at about 60% of the world where you might actually be able to operate. Now, the next is, do you have a consistent edge? So what is your tools? What is your skill set? Do you have a deep history of operating in those markets? Do you have some type of unique ability to glean insight? Do you have a massive, robust computer system that all of the other fund companies in the world don't have? But whatever the case is, what is your tool set to capitalize? And third, do you have the time, the cost, and the ability to do so? Now, what I mean by that is, if you're operating in 60% of the world and you think that you can generate a 1% per year outsized return, which puts you into elite fund manager level, well, then your alpha or your gains on your portfolio is that 1% times 60% or 0.6% outperformance. So that's before taxes. Now, if you're trading the portfolio, that's probably down to 0.4, 0.5% at best. So is that worth it? Especially relative to the fact that it's uncertain and there are other areas that you might be able to capitalize, like better tax or financial planning or better life planning, leading a more values-driven life or helping your clients lead a more values-driven life. That's my perspective. I know the path I've chosen, but if you have any questions, feel free to reach out. Chat soon.